On December 5th, the largest deal in entertainment history took place. Netflix is acquiring Warner Brothers for $83 billion, gaining the entire HBO catalog, the DC Universe, Harry Potter, Friends, Matrix, and massive production studios and facilities. At first glance, investors should be celebrating, but Netflix stock dropped 3% in a single day. Why? Because behind the Hollywood glamour lies very tough math. To buy Warner Brothers, Netflix took on $59 billion in debt. Annual interest payments alone will be about $3.2 billion, meaning nearly one-third of Netflix's free cash flow will now go to banks instead of new content. On top of that, Warner shareholders will receive part of the deal in Netflix shares, which dilutes existing investors. And U.S. regulators may block the deal entirely, since a combined Netflix plus HBO would control over 30% of the U.S. streaming market, more than Disney and Amazon combined. In Congress, both Republicans and Democrats are already demanding an investigation. If regulators block the deal, Netflix will have to pay Warner nearly $6 billion in penalties and get nothing in return. But if the deal goes through, Netflix becomes an absolute monster in the entertainment industry. For investors, this is a moment of truth. Either Netflix builds an unbeatable media empire, or it suffocates under debt and regulation. And now Paramount has entered the game as well, reportedly offering $108 billion with strong political backing. So the real question is, who will end up owning this massive piece of Hollywood? We'll likely know in a year or a year and a half, and only then it will be clear whether Netflix or Paramount was the better investment.